We saved our client £18,000 per year by doing this simple trick.
So, have you built up a number of debts and find yourself using all of your spare money each month?
Do you own your own property?
If the answer is yes to both of those, continue watching this video and we'll show you how to save yourself thousands of pounds each year.
So Aaron, what is debt consolidation?
Debt consolidation is where you have a various number of debts. That could be credit cards, loans, it could be car finance. So if you've got enough available equity within your home, you can use that equity to pay those debts off. For example, you may have a property that's worth £100,000 and only have a mortgage of £50,000. If you've then got debts of £30,000, you could use the equity in the home to pay off those debts.
Depending on the market conditions, lenders can potentially consolidate up to 95% of your property value.
As mortgage rates are usually lower than unsecured borrowing, and the fact that you can take a mortgage over a longer period of time, that can really help you save you money. Also, when it comes to budgeting, if you've got a number of payments spread across the month, so you may have your credit card bill that's due on the 1st, you may have a loan that comes out on the 15th, you may then have your car finance that comes out at the end of the month. When you've got the debts coming out at different periods of time of the month, it can make it really unmanageable. By consolidating and having it all under one payment on one date of the month can make it a lot easier from a budgeting point of view.
Now, if you've got some adverse credit on your profile, don't think that's stopping you from getting a mortgage. The good news is there's lenders out there for you that will potentially lend to you, even with the adverse credit on your profile. There's a lot of lenders out there that will still lend to you to potentially clear off a debt management plan. And also you can potentially take out a mortgage to clear an IVA. Now let's mention that client that we talked about at the start of the video.
So a client recently approached us and they had £50,000 worth of unsecured borrowing. That was spread across credit cards and loans. So between their mortgage, the credit card payments and the loan payments, they were paying out nearly £2,800 per month. Now they had enough equity in their property to actually pay off that borrowing. What we did to help that client is we took a new mortgage out, which cleared off the loans and the credit cards, and that brought their monthly mortgage payment down to just over £1,250. That meant there was an overall saving of £1,550 per month. So over the year, that equated to £18,600.
When you are consolidating debt into your mortgage, it's very, very important that you do not build this debt back up. Our recommendation will be make sure you close down them credit cards so you're not building that debt back up once again.
It's also important to remember that even though you're consolidating debt and that may save you money monthly, if you are spreading the debt over a longer term, you may actually be paying back more interest in total. It's also really important to understand that moving debt from being unsecured onto your property does mean that it could be a higher risk. And if you don't repay that loan, your home is at risk. And also, before consolidating the debt, it's really important that you look at your spending and make sure that you're not living beyond your means. If you are living beyond your means, it's really important that you go and seek some independent financial advice, such as the Citizens Advice Bureau.
So just to recap, if you've got a significant number of outgoings, both on a secured and an unsecured basis, have a think about consolidating your debts into your mortgage. This will potentially help reduce your monthly outgoing. So if you want to save thousands of pounds per year potentially and reduce your monthly outgoing, have a consideration to consolidating your debts into your mortgage.
Please check out our other videos on how to get a mortgage with a debt management plan.